Mohit Gang is here to unpack what to expect in market action this week. Mohit, good morning. Thank you so much for being here with us on News 9. First up, charts not looking impressive at all this morning. It's a flat open. One was expecting that perhaps there could be some recovery, at least some value buying in stocks, but that seems to be absent in sentiment this morning. What is holding investors back?
Hi, Kartik. Morning. Always a pleasure to be on your show. Look, honestly, I don't think so. The mood of the market is right now in any sort of a bullish phase. I'll be very surprised if we hold on to the morning positive tick also. I think last 6 days we have seen consecutive selling in the market, and there is a lot which is happening, Kartik, on the macro side. Look, I think the US-India trade relationship to my mind, I think continues to go one way south. Honestly, the commentary which is coming from top officials in the US government is not very encouraging. I think yesterday or day before yesterday, we saw some comments coming from the Commerce Secretary out there, and that doesn't augur well for a long-term fruitful relationship. And every day, if you see, every second day, there is some announcement of tariffs around pharma, around electronics, around something H-1B visa. So there is an all-round pressure on India to kind of cave in, and my sense is this might just go down the slope, and I think that's what market is fearing right now. I don't think so anything else can trigger the market right now, but a positive news coming on the US-India trade side. And the second part is, Karthik, even the valuation story is not supporting India right now. Honestly, I think even though we have time corrected for almost a good year, the valuation in the mid cap, small cap space still remains frothy at many levels. And I think if we don't see substantial earnings growth, then perhaps we are in for a long wait. I'll not say a long correction, but a long wait for sure.
Let's take this one by one. That's a lot of points that you've touched upon, Mohit. Let's begin first with you believing that the India-US story is only going further south. Now, of course, the tariffs on pharma sector were expected because these were exempt, at least initially, when the 25% tariff on India was slapped. But Donald Trump had also gone on record to say that pharma tariffs could be the highest one has ever seen, could go over a period of time to as high as 250%. Now, a 100% tariff compared to 250% still seems fairly okay. And also the fact that tariffs are likely to be to hit the patented drugs category more than the generic drugs in which India operates. So why the fear specifically on earnings of pharma stocks right now?
Karthik, I think a couple of things out here. The valuations in the pharma space have not been kind. To be very honest, I think the valuations have been at a pretty high level for a while now. And the second part, which is the US-India story, honestly, I think, look, it looks more like a story now which is coming out to corner India somehow and to force India to kind of agree to the terms of US. And if that means that for a temporary while, US might have to hit sectors which India is good in, that could also come through, right? And I think that's the fear in the market. It's not about whether India is good at generics or whether India is not good at generics. I think it's all about now targeted action being taken from the US government against sectors which are perhaps our core strength areas,
Right.
right? So that's the whole issue right now.
Okay. And can it go any worse than this? I mean, leave aside the pharma sector for now. You said that the story is going further south, but 50% is pretty much as high as one can expect it to ever go. If anything, if things were to change, they're likely to change only for the better. Why do you think they will continue to become worse from here?
Look, I think on the headline front, I think it might just continue to become worse if things are not salvaged immediately. And there is no sign of salvation right now. There is no indication coming from the Indian government or from the US government that the talks are headed positively, or there is any sign of any party giving in or ceding in few inches. Right. So if this continues for a long while, then I'm fearing further action coming India's way. So that's part number one. Part number two, I'm not fearing a huge value correction out here. Honestly, that's not happened for last 1 year by virtue of the domestic strength which we have, by virtue of the domestic macros, domestic buying. So all that is good, supportive indicator that Indian markets might still continue to stand. But in terms of time correction, perhaps this might just last a little longer than what we have anticipated initially. Having said which, Karthik, here's my disclaimer that we are one news or one headline away from just turning away, right?
Right.
So if there is any positive development or any positive headline which comes through our way, then perhaps the markets might just soar and it'll be then very difficult to catch the market. So it's a conundrum. You can't be out of this market, but you can't perhaps be all in as well.
All right, and one potential positive news, not externally but domestically, might come on the 1st of October by way of RBI's Monetary Policy Rate Setting Committee meet, which could potentially cut interest rates by about 25 basis points. But what we are seeing, at least on a Monday morning on the charts, Mohit, is that the defensive stocks, the FMCG sector, is reeling under God knows what pressure, because the inflation expectation is expected to be modest. You also have high growth expectations on account of cut in GST. But we are seeing stocks of Hindustan Unilever down about 2.5%. Similar story coming from Nestle India and Britannia, which are down about 1% or so. Why are the defensive stocks being so defensive at a time when there is potential good news around the corner for them?
Yeah, I think Karthik, it's a very topsy-turvy kind of a scenario. The defense stocks are getting aggressive, and the defensive stocks are getting more defensive, right? So that's the whole thing. But I think it's more to do with the commentary which has come out from HUL.
Okay.
I think the commentary was that they will perhaps turn around only flat kind of results or very, very minimalistic single low-digit growth, and which is what market is not liking. But I think they've kind of clarified in the commentary that it is the GST impact will take a little while and perhaps maybe a quarter more to come through in the financial results. But I think market is not very happy. I think market was expecting huge bumper results this quarter itself. But I think to be fair, my sense is the consumption story is still a quarter away to reflect in the results. It will start reflecting on the ground perhaps this festive season, and the opening signs of which are already evident. But my sense is in terms of the results, in terms of the numbers and the bottom lines of the companies, perhaps it might reflect a quarter late.
And the other side of the coin happens to be the consumer durables, especially the auto sector. We saw news reports of Tata Motors booking some 10,000 vehicles on the very first day of Navratri, Maruti Suzuki booking some 30,000 vehicles or so. But some mixed cues in the auto sector this morning. For some reason, Maruti Suzuki is under pressure. The stock is down, but we are seeing positive action on the other top three auto companies, including Mahindra, Tata Motors, as well as Hyundai. So some sort of jitters around Maruti Suzuki this morning. Are you picking up something, Mohit?
Not exactly, Karthik. I'm not sure, or maybe I've missed a beat out here in terms of why the market is why the stock could have opened negative out here. Look, I think overall on the auto pack on the consumer discretionary durable FMCG auto, I think these are few sectors which I think will remain the supporting sectors in the market for at least a year more. I think the GST impact is massive, and it will start reflecting gradually and slowly. And perhaps we have already seen those signs in the overall auto segment where the booking numbers have been massive. Look, I think one thing could have been that perhaps market was anticipating much higher numbers from Maruti to come through, but it has not come from Maruti, but from the other players, perhaps from Hyundai, from Enmin, and Tata Motors. And maybe that could be one of the reasons. But again, as I said, I'm not very looking at a day-to-day movement out here. Perhaps from a year kind of a story, I think I still remain bullish on the overall back.
All right, so bullish on the auto sector is the word coming in from Mohit Gang. Meanwhile, markets have inched up significantly ever since they opened about 15 minutes ago or so. In the last 15 minutes, Mohit, tables seem to have turned at least slightly. Nifty 50 and Sensex are both up about 0.2%. Sensex is up almost 180 odd points right now as we speak. But looking at the charts as well, I think there is definitely a little more favorable skew in favor of green as opposed to red. So overall, this week, again, with the MPC, with the potential of a rate cut, are we likely to see some buying action, at least at these slightly discounted valuations between today and tomorrow, Mohit? Or do you continue to remain pessimistic about the outlook and you think that the external pressures are going to weigh negatively on the market?
Look, there's no two ways that with 6 days of consecutive selling, the markets were looking very attractive. They are looking very attractive, and that's perhaps the biggest reason why you see a green tick today morning. Honestly, I think because technically it's become oversold, it's in the oversold zone, and perhaps there's some kind of buying. But will there be a sustained buying? Will we not see selling pressure in the second half or perhaps tomorrow? That's for everyone to see. Honestly, structurally, I don't think so. Anything changes in the market. Perhaps a bounce back here and there, a dead cat bounce or something like that. But yes, I think the MPC meeting also, Karthik, 25 bips rate cut. Market is kind of sensing it. I'm not saying it's completely factored in. RBI has some headroom given the inflation trajectory and everything, and perhaps looking at the trade relations which are soaring with US, maybe the MPC goes a little aggressive and gives us that 25 bips of bonanza, and I think that'll be good. I think that'll be good for the market, but will that give you a sustained rally? I really doubt that.
All right. Well, no signs of an upcoming rally, at least that's the view coming in from Mohit Gang. Meanwhile, a look at the Nifty 50. Pharma pack also suggests that there are some green shoots, at least as far as value buying after Friday's correction is seen. Sun Pharma is now up almost 0.8% or so. Cipla and Dr. Reddy's are also in the green this morning. So, again, Mohit, I think, which way the markets are going to turn right now would be difficult for anybody to sort of anticipate. But for a retail investor following the SIP route, following the mutual funds route, entering festive season with gold at record high, well, what should be the strategy for the retail investor? Just sit back, wait for some sort of a positive action, because it's been more than a year since we saw Sensex and Nifty reach their peak as far as the index were concerned. But the last 1 year has pretty much been a watershed as far as investments go. So what should the retail investor strategy at this moment be?
Look, Karthik, I continue to maintain that the cost of being out of this market can be much higher than cost of being in the market and facing a mild correction. My sense is from a retail investor perspective, one has to continue to build the allocations. One has to trust the process out here. As I said, it's a matter of a headline. Whether that headline comes this quarter, next financial year, no one knows, and you can't guess that out, right? So you have to be ready whenever it comes. You have to be in the market well positioned with your allocation so that once the rally comes in, you can make the most of it. Markets have time corrected for a year. Perhaps we again time correct for 6 months, maybe in worst case scenario, a year more, right? And that's the time when you accumulate a good corpus, and then the market starts looking extremely cheap on valuations, and that's a typical market cycle. And if you miss that mark, then you miss that mark, then you can never catch that ride again. So from an investor's perspective, continue allocations, continue through SIP route, don't go lump sum, don't go all in right now at this level, but keep your allocation staggered and keep putting into sectors and strategies which you like the most.
Right, Mohit Gang, thank you so much for those inputs. Stay invested, follow the SIP route, avoid the lump sums, and of course, it's better to be in the market at this moment than being out of it. Mohit Gang, excellent words of wisdom coming this morning, and thank you for sharing that experience here with our viewers.